Hi, this is Matthew Cratter from Trader University, and today I want to answer the question, is Bitcoin the Myspace of crypto? I get this question a lot, and by it people mean, is there going to be another Bitcoin, another crypto that comes along that's just better than Bitcoin and displaces it in the same way that Myspace was put out of business and displaced by Facebook. If you're interested in crypto, Bitcoin, just want to see what I'm investing in these days, be sure to hit that subscribe button. So I think there are a number of reasons why this is not a good analogy. I'd say that the first one is that when Myspace was in existence and then Facebook came out, you could have an account on both systems. You could keep your Myspace account. It didn't cost you anything to open up a new Facebook account. And then as soon as the balance of gravity shifted to Facebook, everyone had more friends on Facebook than Myspace, they just stopped using their Myspace accounts. And a lot of people probably still have Myspace accounts that are active but just haven't been accessed in many years. So how is this different from Bitcoin and another crypto? Well, if you have $100 in Bitcoin, you cannot simultaneously have it in another crypto. There's a cost of switching. You need to sell your Bitcoin and then buy that new crypto. So I think that's one of the fundamental problems with the analogy, that it's not cost-free in the same way that it was to have a Facebook account and a Myspace account. Now, both Facebook and Myspace and Bitcoin benefit from something called the network effect, or different network effects. And you can think of this really clearly on something like eBay, or at least the way eBay used to be. All the sellers were on eBay, and that's why all the buyers wanted to be there. And all the buyers were on eBay, and that's why all the sellers wanted to be there. In the same way, Facebook, everyone's friends, at least a certain generation, are there, or Instagram, and so it makes sense to be there. And so Bitcoin has obviously benefited from this as well. And this is something that makes it very difficult. It's notoriously difficult to do a startup, whether of a company or a crypto, and get the network effect going. Because you have to, it's almost like starting a new restaurant or nightclub. You have to somehow convince people that a lot of people are interested in it, or it's the new hot place to be. And so Bitcoin has this real advantage, is that it has many years. It's been growing very, very organically for many years, and it really has a head start. It benefits from something called the Lindy effect, which means that when you're talking about non-organic things, obviously organic things like people and animals die, but something like a technology or even a company like Coca-Cola or McDonald's, the longer they've been around, the longer they're likely to be around. So Bitcoin benefits from this. It's the oldest existing crypto that is still around and still widely used. It also has the largest market cap. Now, market cap is just the total number of coins times the price. This is an analogy that comes from the stock market. And we can see that the market cap really falls off quickly when you get moved down the top 10. So Bitcoin's right at the top. Today, about 176 billion market cap, which we should say is very small. In the world of finance, this is like the size of an S&P 500 company. Amazon is over $1 trillion, Apple's over $1 trillion. So this is still relatively small. The gold market, for example, the whole gold market is something like 11 or 12 trillion dollars. Ethereum comes next. So Bitcoin at 176 billion, Ethereum at 22 billion, XRP at about 8-9 billion. Tether, which is a stable coin, we're not really going to focus on that because it's not, it's meant to just stay pegged. It's not going to go up in value, so it's not really an investment. And then it really falls off the other forks of Bitcoin, Bitcoin Cash and Bitcoin BSV. Definitely don't recommend these. These are failed projects. So the real contenders up here are Bitcoin, Ethereum, and XRP. You can see that Bitcoin has the liquidity. It's got the market cap. If you're a big investor, let's say you have $5 billion to allocate, you could possibly get into Bitcoin. There's no way you could get into one of these other ones. You would move the market too much. So that's an advantage of having a large market cap. It helps you to get bigger. Now, Bitcoin has been a way to secure money for the last 10, 11 years. And here we can see the top 100 richest Bitcoin addresses. And the numbers in here are just unbelievable. Like here's an address, for example, that has $977 million worth of Bitcoin in it, 900 million, 767 million. So these are very large amounts. We know the public addresses of these. And so if Bitcoin were hackable, someone would have gone after these. And, for $1 billion for $900 million, you could hire the best hackers and the best developers in the world to try to help you secure this. And you'd be happy to pay them $800 million and keep $100 million for yourself. This shows how safe Bitcoin is. It cannot be hacked under current technologies. And so people can see that it's a safe place to store their wealth. Obviously, it's very volatile. It can go up and down. But here's some very large amounts that are being secured using Bitcoin. Now, what about some of the rivals? XRP is one people are always asking me about. This is complete garbage. It's a failed project, down 92% from its highs, and even the insiders are jumping ship. This project is done. The head of XRP markets just left about a month ago. And so when you have this sort of insider, this sort of price action insider leaving, this is a project that has no future. I'm not saying it can't go up as a speculative investment. Maybe it could go up, especially if you see a lot of money flowing into altcoins. But it's also very risky. And if you want to bet on the ultimate winner, Ripple is not the place to be. Also, they're very centralized, and so they're subject to single points of attack, single points of failure. They're in bed with the banks, which I consider to be a terrible thing. I don't want the new financial markets to have anything to do with Wells Fargo or some of these Bank of America, these horrible companies. So that's Ripple. Not interested. And if you're bullish on Ripple, you should ask why Miguel Villas left. He probably knows something that you don't know. If he thought Ripple was going to be a huge smashing success, he would not have left a month ago. Ethereum's the other one, the other big daddy in the space. We saw it has a market cap of 22 billion, which is still a small fraction of Bitcoin. It's down 85% from the highs. It's also it's a centralized currency, and so it's subject to many points of attack. You've got Vitalik Buterin here portrayed as Jesus holding a Lamborghini, a famous meme. I'm not sure what to make of this. But the problem with having a charismatic founder and central guy is that if anything happens to him, the currency crashes, people freak out. So this is a story from Reddit from 2 years ago when people thought that Vitalik had died or been murdered, and it turned out to be a hoax, but it still crashed. You can imagine if Vitalik actually disappeared, what would happen to this currency, or if he were kidnapped by the Chinese or the Russians or the US government or whomever, or North Korea. And so this is the problem with centralized currencies. They're subject to someone could take him hostage and use him to take over the currency, etc. It's a little worrisome too when people are being portrayed as Jesus. That's always a bad sign. Apart from the price action being down 85%, we can look at their hash rate on the network. This is just a measurement of computing power. We can see that it peaked in mid-2018. The hash power is down over that period. Whereas if you look at the hash power, the hash rate for Bitcoin, it's been rising over that same period. And it's been hitting actually new highs as recently as March of this year. Much better chart, also at a much higher level. I think these are gigabytes or gigahertz, and these are terahertz. And if we put them both on the same chart, we can see here is Ethereum down here, the purple, and the pink is Bitcoin. Now, the higher the hash rate, the more secure the currency is. And so this is something to keep in mind. One reason that it's a much more secure network. You don't see people storing their wealth in Ethereum in the same way that we saw they're storing their wealth in Bitcoin. So I don't like centralized cryptocurrencies run by a centralized company. This would disqualify Ethereum. It would disqualify Ripple. I don't think Vitalik is a trustworthy person. I'm not really going to go into that, and that's just my personal opinion. If you try to start a new blockchain, this is a problem you can have. All the existing computing power in the world can come in and do a coordinated 51% attack, and this happened to Bitcoin Gold. So this is one problem with starting your own currency. Now, Bitcoin is down, of course, from the late 2017 highs. It's only down 53% if we compare that to Ethereum and Ripple. And I expect Bitcoin to be hit new all-time highs later this year, or certainly by next year. Now, this is a chart of the market cap dominance by Bitcoin. We can see that for a while, Bitcoin was really the only game in town. That's why it had close to 100% control, 100% of the market cap across all cryptos. Beginning in 2016 and then really accelerating in 2017, 2018, you had lots of new ICOs, lots of new cryptos being developed. And as a result, Bitcoin's market share fell, though it was still at a fairly high level, 40%, which I believe was still bigger than any of the other cryptos. Now, since this long bear market in cryptocurrencies, since the end of 2017, we can see that Bitcoin has regained its market dominance. It obviously hasn't gone all the way back up to the top because we have things like Ethereum and Ripple, and we have stable coins, which I believe they're counting in here. I don't think it really should be counted since they're pegged to $1. But we can see that Bitcoin has really retraced and is now close to, it's at 68% of the market cap. As we saw, this is the big daddy of Bitcoin, of cryptocurrencies, and it's really regained this market share as all these new cryptos from 2017 really have become failed projects, and the real interest is going into Bitcoin now. We can see that if we look at trading volume as well, Bitcoin, Tether, and Ethereum account for 90% of the trading volume. If you're a big institutional investor, trading volume and market cap are the two most important things you look at because you need to be able to move in and move out. So the market share in terms of volume is up from 75% a year ago. I believe that's in terms of volume. That may be in terms of market cap as well, but I'll link to this article so that you can read it. When institutional investors begin to invest in Bitcoin, and it's already happening, this is a trickle that is going to turn into a flood in the coming years. Anthony Pompliano talks about in this interview, which I'll link to. Institutional investors are going to invest in Bitcoin. That has the trading liquidity. It has the market cap. It's got the depth of markets. So this is where they're going to go. They're not going to go into XRP. They're not going to go into BSV or Bitcoin Cash or any of these forks or copycat currencies. And so Bitcoin will really benefit from these flows. If you have trillions of dollars worth of flows, you have a market cap right now of 160, 170 billion. That's going to increase the market cap remarkably. Now, we've already begun to see this as the legendary hedge fund macro investor Paul Tudor Jones has been buying Bitcoin and made it public. Lots of high-profile people obviously own Bitcoin. Then there's the whole ecosystem. So if you're going to create the next Bitcoin, you need to simultaneously generate an ecosystem. You need to have a bunch of nodes. You need to have a full network. You need to have a lot of hashing power. You need to have a good brand name. Bitcoin, even my young kids know what Bitcoin is. They don't know what any of the other ones are. So you need to have that sort of brand, like the Apple or the Coca-Cola or the McDonald's. Bitcoin has that branding. It's got the developer network. It's got the market cap. It's got the liquidity and the depths of markets. And it also has all the financial innovation going for it. So they're Bitcoin futures now traded on the CME group. That's the only cryptocurrency that has futures and options on the backed and on the CME. You can lever up the other cryptocurrencies on exchanges, but in terms of legitimate mainstream markets, only Bitcoin has its own futures. In addition, there's a whole ecosystem besides all the developers, the miners who are all over the world. You have this financial ecosystem that's growing up around Bitcoin. You have companies like, and I'm not promoting any of these, I'm not being paid by them or anything. This is just a selection of names that I'm familiar with. So this is not a recommendation, obviously. Unchained Capital, Bitcoin Native Financial Services, BlockFi, which offers you interest on your Bitcoin. This is one company I would not recommend. I don't think you should try to earn interest on your Bitcoin because you give up your private keys and your Bitcoin can disappear. If you think something's going to go up 100x like I do, who cares if you make 5 or 6% a year on it in addition. But just an example, this is a well-known company that's part of the Bitcoin ecosystem. Casa is another one that offers multi-sig. And then there are all the Bitcoin conferences. This is just a small selection of events coming up in October of 2020. Bitcoin has the most conferences. It's got the most, sort of the best, widest brand. Now, Bitcoin has many advantages that new cryptos do not have. It basically began as sort of a Trojan horse. It was invented by Satoshi Nakamoto. We don't know who he is, where he is, whether he's still alive. And it started off as just sort of a Silicon Valley project, sort of the way that PC started among just geeks and people who are interested in tech. This is how Bitcoin started. People were buying pizzas with it. And it's evolved over time. It sort of entered the system. It's kept a very low profile. And it has slowly taken over the financial system. The metaphor that I like, that Mark Andreessen invented, he talked about software eating the world. I would say that Bitcoin is certainly a form of software, and it is eating the world as well. And it has this advantage that it got started in the depths of the financial crisis, and it's been slowly growing, taking mind share, taking market cap, absorbing wealth, and basically eating the world. And now it's at the point where it's a fairly scarce asset. Its stock to flow just went up. It's got a huge market cap, and it's be very difficult to play catch up. You can't just start. It's not like Facebook starting another platform and then people slowly migrate over. In order to leave Bitcoin, you have to sell it and then buy another crypto. The nice thing about Bitcoin, as we've said, it's decentralized. These are all the full nodes. This is the Bitcoin network. It's spread all over the world. And so if you're launching a new secure crypto, you've got to somehow figure out to make it decentralized like this. What we basically had with Bitcoin was organic growth, and it slowly spread kind of underground around the world. And now it's pretty much unstoppable, in my opinion. So it's had this organic growth. If you try to launch your own crypto, a great example is EOS. I'm not willing to go into it. They raised, I believe, $4 billion back in 2017 or early 2018. Had a lot of problems. People had their EOS hacked, and they had a problem with phishing, etc. There are lots of vulnerabilities in the code. The nice thing about Bitcoin, as we know, is that it can secure wealth. We know it's all open source code. It's open source software. Anyone can take a look at it. And if there were a way to hack it, it would have been hacked already. Now, maybe quantum computers come online eventually. I think we're still very far away from that technology. Maybe they can hack it. We shall see. That I would say that's one of the risks of investing in Bitcoin. But here we go. Here we have all this money being stored in Bitcoin, being stored securely, and new cryptos that have come out have just been unable to do that. So people who bought EOS and tried to store their wealth in EOS, it's down. I don't even know how much it's down since it came out, but it's been a complete disaster. And again, this is a centralized crypto. It's run by a particular company called Block.one, and they control EOS. So again, subject to a single point of failure. Hope you guys found this video helpful. If you did, hit that subscribe button and that like button. Let me know your questions and comments in the comment section below, and I'll see you in the next video. Thanks a lot for watching.